Hey traders, welcome to a YouTube Live. We got BTC with another analysis here. Had a bit of a fall from the $9,800 zone to around our major long-term demand zone, which is around 9,500. We're at there right now. Like always, we'll start off looking at the daily charts. We did see the weekly close. We can see it did close green. There wasn't a tremendous amount of transactions or volume that took place within that week, it seems. There was a pretty good wick, both from above and below where the open and close was, where the close was just above the open. And then this current candle we have for the weekly is looking a little bit bearish, retesting those lows again. But we haven't seen the price go below it, so we are not bearish just yet. We do have a nice structure on the 4-hour chart. But as of right now, we are just going to be looking at the daily charts that we have right here. So this is the CME futures. We do have a gap a little bit, but because of the big wick, theoretically, yes, that makes sense to fill the gap, but it's not like there was a gap with no actual no space where the price hasn't been. Whereas on some of the other gaps that we've seen, there's areas within the price where, for example, here, there's absolutely no time between this wick and this wick that the price was connecting in the same area. Whereas if you see even here, that was a potential pullback and a retest and a completion. And this could have been a potential. But yeah, we do get a pullback here. Let's just look at the potential here. Give me one moment. All right, so I'm just looking at the comments there. So moving on to different daily candles, because we don't really see a whole lot. We could pull back and retest this 10.2-ish K on the CME futures, kind of to retest the gap close that would fulfill if we do actually come up to this little resistance right there. But we'll see. We don't see a tremendous amount of buy volume coming right now. But overall, looking at the previous uptrend, we see that there is increasing buy volume. So on the overall structure, kind of looking at 2020, we do see increasing buy volume coming into the market. So that's great to see. And then going on to another daily chart, we see that there is Gemini on the lower highs. We'll really get into it on the 4-hour chart and hour chart. But we see lower highs. We see decreasing sell volume. Although we did get that massive rejection, which did get more sell volume than the initial kind of push up and the pullback to turn into lower highs and lower lows. But we are holding this set of lows right here at our demand zone. I think what we can do is just put it like so. And then we drew a descending trend line connecting the lower highs. And then we did try to get a couple attempts. The altcoins were definitely looking a lot more bullish because they've broken the descending resistance. It made a new market structure high. There was decreasing sell volume and increasing buy volume. There was bullish candles, bullish engulfing candles, breaking resistances, holding supports. A lot of indications signaling that we could get a move to the upside. Unfortunately, we got rejected there. So the alts got rejected as well. But nonetheless, we will continue on with the analysis. We're just still in the squeeze here. And this is the daily chart for the Heiken Ashi candles, and we'll also go over the 4-hour candles as well. This shows the momentum a little bit more and a little bit easier to understand just in terms of momentum compared to the candlesticks that we normally use. So we do see that the pullback that we're currently experiencing, that is pulling back and retesting the previous zone of sensitivity back in 2019, is looking still pretty healthy. We see that the support is getting held, which is good, and we do see that there are some green candles coming here that could indicate a potential shift in trend. We got a pretty big rejection from the resistance, but it does look like we could be closing green. There's around 3 hours left until this daily candle, and we do see increasing volume coming in. And decreasing sell volume right here, very, very clearly shown. We see a support hold, and then there's less and less supply coming into the market, which could indicate that there's going to now be a shift and then increasing demand. Kind of like you saw here, there is decreasing sell volume, and then you see increasing buy volume, and then you see the move up. Same with a lot of other scenarios. Even here, you see decreasing sell volume. You do see a little bit more increasing sell volume here. And then coming out of it, you see increasing buy volume coming into the market, which then drives the price higher up. So looking at the volume right now, we like, again, decreasing that sell volume. So that could indicate something that's VSA volume spread analysis, and then we're using our technicals as well, and then also just simple market structure. Previous levels of resistance or higher highs are now the higher low supports. And then looking at the 4 hour for the Heikin Ashi, we do see that the price is now at the lows at the support zone, previous level of resistance, new level of support. We held 1, 2, 3 times now. On the 4 hour, the volume is definitely looking a lot more bearish. We see volume distribution within the consolidation, but when you do look at the overall trend of 2020, you can see that there is significant volume accumulation occurring other than this current consolidation and within the consolidations when we are making lower lows and lower highs, which makes sense. The bears have control, they have more confidence, so it makes sense that there is more bearish volume. But overall, within the trend, within the move from 2020 and onwards, we do see that there is significant volume accumulation on the upswings, and considering that with the actual price action in the market structure, you can combine them together and formulate a bit of a story that BTC is showing. So we are going to patiently wait until the price breaks our structure, our descending triangle, because we have a horizontal zone of demand, and then we have a resistance holding the price, making lower highs, squeezing the price towards the apex of the pattern. So we're just having to patiently wait and let the price do its thing. We're just going to keep the Heikin Ashi candles on the daily chart, and then we will now go on to the 4 hour chart here, where we have the nice squeeze from the higher lows and the lower highs. Like we talked about before, we got the higher lows right here with a nice trend line connecting the higher lows, and then we also have lower highs connecting with the resistance there. So this is the apex of the pattern. The price has to make a decision. We have a very strong level of sensitivity right here. So in my opinion, this is the higher probability trend line to respect, meaning that it will move to the upside. So then our bias still has been, it's been like that for weeks, is we're going to go from around the demand zone to the next level of supply. But obviously we will see how it plays out. But this did turn out to be a price action pattern that we have a pretty clear edge on. Initially, we drew the trend line like this, and then we traded off this resistance support. Did not work out, and then we did have some entries on some alts when we were kind of down here and made like a little bit of the move up. But we did get rejected very, very hard off this zone right here, and then a lot of the alts took a nosedive. I'm not really going to be entering just yet. I want to see if the price is able to either break the resistance or support. I don't want to be entering because it could just bounce around here, and that'll just create a lot of volatility that I don't want to be in, because I don't want to have my stop loss that wide. So that's the overall 4 hour chart. We're looking pretty good. We're just in a squeeze, so we just have to wait until the price makes a decision, and then we are going to act upon whatever happens. But looking at the two different scenarios, what are we looking for? Well, let's initially look, what are we looking for? A downside move. What I want to see is a break of this resistance turned into a nice support. So it has to break maybe to around the $9,100 previous level of support, which is right around there. And then we could potentially come back, retest the previous level of support as a new level of resistance. This would also confirm the head and shoulders pattern with the previous support equaling the new resistance with the breakout zone, and then that would be, for me, a really good structure that I would want to be looking for. The pullback could be just like a normal pullback. It could be an ascending triangle, an ascending wedge, a channel, some ascending trend line that connects the higher lows. I really like trading those, and then we create our confluence zone for the horizontal area. We look for a push to the downside, a pullback with the entry on the lower high, and that's how we would trade this setup. We could even potentially use this zone of confluence where you have the horizontal zone and the descending zone coming together at a single point. That could also be an area of interest if we do get the price to come back all the way, but I think if we do get a push to the downside, it will be either a quick pullback or kind of like this, and then another move towards the downside. So we'll see how it goes. We don't have any confirmation yet. We're not going to enter when the price is actually falling. We're going to be entering when we get a pullback confirming the lower high, because this is a high, this is a lower high, this is lower high. We're wanting to see the price stick below this ascending green trend line for another lower high to continue the market structure towards the bearish side. So that's the potential for BTC on the downside. Now, if we're going to move to the upside, we've already broken this major zone of confluence confluence where we have the descending zone, which is the red zone, which is going to be right here. And we have also broken and retested this resistance, which is now going to be a new level of support. So we got a lot of buy pressure at this zone, and we know that because it's an area of confluence on the larger time frame. So now that we know that, the higher probability situation is to break this resistance zone. Now, what are we looking for a break in resistance? Well, let's say if we hold the recent high that we want to pass, ideally, before we look to enter BTC, would be this high right here. But we could be looking at this high potentially. It kind of depends on where we break, because if we're holding very, very close right to the apex of the pattern, like right here, so if we're holding like this and if we make a couple lower highs, and if we break to the upside, we could see those lower highs act as new levels of support. So we don't exactly know. So let's just say we're going like this, and then we break to the upside, and we got a nice level right here, or we got a nice level up here. We're going to see a pullback to form the market structure higher low, and we're wanting to enter on the higher low. Now, it could be here, it could be here. We're wanting to see a confirmation of buyers enter the market before we enter, but regardless of where it pulls back, our support, or our stop loss is going to probably be either here or a little bit lower. So our stop loss zone is going to give enough room that the price can play around kind of near this ascending trend line, and if it's able to pop up, that's great. If it's not, then we manage our risk and we move on to the next trade. But if it does break this zone, I do think that it will be some significant shift in the trend and shift in the supply and demand, because it's a pretty well respected zone. Remember, 3 touches of a zone makes it a potentially dependable zone, and then 4 touches makes it a very dependable zone that we can use. So if we get one more touch here, that would be really good, and then we could then use that zone with a horizontal zone to kind of create that confluence where a descending zone and a horizontal zone coming together. That would be the ideal situation for us, because we have the highest probability chance. So that is the 4-hour chart. 2 possibilities. We want to see a high or low. It doesn't really matter how high it goes. We're wanting to enter on the completion of the exhaustion. Remember how market phases have cycles. There is the push or impulse waves and the pullback or exhaustion waves. We're wanting to enter at the completion of the pullback and the beginning or the start or the initiation of the next impulse wave towards the upside, continuing the trend. Right? That's the idea for what we're wanting to do. And also looking at the VSA side of things, the volume spread analysis, the market have different phases. This could be a potential accumulation phase where we're just bouncing from support to resistance. It could be a descending zone. It could be an ascending zone, but it's going to be some zone where the price is hesitating to kind of go higher or lower. It's in a range. It could be holding a range, making higher lows. It could be in a range holding lower highs, but that's still a range. And then once it breaks out, then it's going to either have the mark up phase where it's going to have uptrend, and then or down phase, which is a mark down trend or markdown. And then these consolidations are what we're looking to enter on. So we're looking for our price action patterns. We're looking for symmetrical we're looking for triangles, wedges, channels, head and shoulders, all these consolidation, accumulation, distribution, phase, price action patterns that kind of are in line with other factors that we look at in order to kind of create a picture of what we're able to see and kind of create a story of the price action. So there's not a whole lot more to talk about in the 1 hour. We drew our 2 zones here. We got our descending zone, we got an ascending zone. They kind of create a apex right here, and we also have a mid-range zone that the price is respecting, and we're also going to incorporate that. We don't really need it, and I'm a little bit more biased towards the upside, so I did keep a couple of these mid-range zones that we have labeled on the price action here, where the price could be hesitating to make higher highs because of these areas, but we will see how it goes. And yeah, I'm not going to do anything. Like if it goes towards the very, very end of the pullback, I'm thinking of potentially making some shorter day trades, because if it goes all the way towards the actual apex, it's 3 days, and I'm not going to be obviously waiting that long to take a trade. I'll be trying to play maybe 15 or 5-minute chart even within the volatility just within this. It's a little bit less predictable and dependable because you don't have a single zone, but you know, you could just long at near supports and short at near resistances, and then just expect that the price is going to bounce until it finds the apex, and then you just have to remain patient when it's right in this area. But that's basically how we're going to be playing BTC on the 1 hour. So we have a pretty nice level of support there, but a lot of wicks to the downside here, around 95. 94.50, I guess, is kind of the lower middle range of the demand zone. But we'll see how it plays out. The next thing that we're going to be looking at is the tools, which is BTC longs and shorts. We do see that, well, actually, if we don't know what this is first, the actual candles here are going to be representing the margin trades represented in the number of BTC opened on the Bitfinex exchange on the 1 day, and then this is going to represent the margin trades that were opened short or trying to make money on the downside. Obviously, we had a massive collapse in the short positions that were opened on margin on this exchange. So for me, that tells me that there's not a lot of opportunity for short squeezes. There's a lot of loss in confidence from the shorts for margin open, or for margin trades anyways, at least. And then on for the long side, we do see that there's a pretty strong level of resistance. We kind of broke this consolidation here, and now we're kind of making a move to the downside, similar to what happened last time. So kind of goes in line with the rest of the story that we're seeing. There is a drop in confidence from the sellers, but then also we do see that the consolidation is kind of giving the buyers some hesitation in actually purchasing the coin, and I think we'll just see a drop in the the amount of margin trades that were open for the long side until we see the breakout for the symmetrical triangle or the descending triangle, whatever you really want to call it, depending on if you want to incorporate this ascending trend line. Because even if we do break that zone and kind of hold here, I am still going to wait until we see a break in the resistance or support. So the main things that we want to be looking at are the horizontal zone, the descending zone, and then the secondary things would be this ascending zone, which does play a role, but in my opinion is less important. Although if we do break this ascending zone and fall closer to the apex, that does give me a little bit more of a bearish indication that we could see a sharp drop, because I think there's a lot of stop losses around this zone, because there's a lot of buyers, there's a lot of people that entered at this consolidation right here, I'm sure, and have not got out. So then basically everyone from February 20th ish February 5th at the start of the month would now be under for every single buyer entering from that point onwards. So that's how I'm going to play the market. Not too much to it. And then we'll just quickly check out the last thing that we're going to be looking at, which is a coin farm exchanges. That's going to show us different exchanges. We see that we have BitMEX, Binance, and Bybit. So we've got 3 different exchanges that we're going to be looking at. First, we're going to look at the 24-hour, which is going to show us the amount of positions that were open on the 24-hour versus long and short. So on BitMEX, definitely short side, that it's weighted on 53% on the short side versus 47% on the long. Binance, same story, 53%, so there's a bit more discrepancy, 47% towards the buy side. And then on Bybit, short side again, 50.5 versus 49.5, so not much discrepancy on Bybit, but all 3 exchanges are more short-sided. And then on the short-term time frame, on the 1 hour, we have for the long side 47% versus short side for 52 on BitMEX. We see on Binance there is only there's only 44% of people that are looking to long on Binance. There's 55% of people that are looking to short, and on Bybit, pretty big discrepancy, 57 or 58%, actually 59, sorry, almost. If you round up on Bybit for the shorts, and there's only 41% of people looking to long on Bybit that have already longed on Bybit for the short-term time frame. So definitely more short-sided. People are looking to make money on the downside for now. We'll see how the rest of the market turns out. We are near support, so that does make sense because people have been shorting the bit of the move to the downside, the push or impulse, and then the correction or the exhaustion phase, and then the next impulse move to the downside, coming closer to the support there. But we could see a move back up. We'll see. I might be looking at these smaller time frames to kind of capture maybe a few scalps here for the impulse moves if we do get a move up, or if we get a move to the downside. But I do not want to be entering on the wicks here. I really want to have confirmation that we are going to be dropping if we do see a drop. So that's the overall analysis for BTC. I hope you enjoyed it. If you have any questions, leave them in the Discord or YouTube section, and we'll be able to answer them. And until next time, happy trading. Have a good one.
Charlie was making dance videos, nothing was really happening until one blew up, right? But Dixie still thought the app was cringy and didn't want to try it out. Charlie got famous and this convinced Dixie to get on there. They started collabing and then she started growing. Part 2 coming tomorrow. Here. Stop, Mark.
TikTok right now. It's Monday morning, it's 11 a.m. It's the grind, the hustle, the first day of the week. You should not be getting distracted on TikTok.